Okay, market just opened and we're looking for opportunities for an entry into a trade. Right now, what do we have? Okay, so the first candle of the day is breaking down, gives us our current low. We don't have a clear direction on what we should do, so we have to be careful. Um, we're seeing the put side increasing, but that could be short-lived. So we have to be mindful of that. That could be short-lived. So we'll let the market dictate. We don't have to rush. We don't have to rush. And when we're ready, let me set so this is SPY. So this is the log of whatever happens. So it's taking this weekly. So to make this, I'm going to, so it's pick days. I always like to do 20 SPY contracts. So I'm going to, well, I took a trade there. I shouldn't have taken a trade there. I took a call, so looking for price to go up. Yeah, it's gone above that, so it creates, the stop is set. It's usually, so it's set at 25%. So right now the trade is less than. So right now the exposure is $180. Is the stop is locked at $775. Let's see how much was really put at risk on this trade. $3,000 it was at risk. So $775 is the risk attached to it. I don't need to do anything with the trade. The automation is running on slot 1. Once it takes a 25% loss, it's going to get out of the trade. No, you don't need to do anything about that. He's just going to get himself out. That was the wrong trade. Shouldn't have been a call because price never broke the high of this and never broke the low of the low. So let's see what happens. You don't touch it, you have to accept the risk. Once you take the trade, let it play itself out. Walk away, go and grab coffee or something. All right. And if the trade is in a trend and that trend is good and it stops out in between a trade, then it's going to automatically take another trade. So it seems as if this market wants to, it's pretending to want to go down, but we'll see if it does that. We'll see if it does that. Today is the 27th. We'll see if it does that. Let's see. So the risk went down to 680. Now it's going back up. Well, let's see. Anyway, we'll see what the market does. So this is our low. This is our high. Want price to be above this 50% to at least get some confidence that we could get back to the high. Want it to close above this 50%. That will give us more confidence on the direction of the market this morning. Right now, we're sideways. So we only take a trade here, here, or here. We don't take a trade anywhere here. It'll be too premature. So this is SPY, this is SPX. This is SPX, which is equal to SPY. It's going to be the same movement on SPY, but I'm trading XPX on um, my other computer. Well, let's see what the market has to offer. Okay, we don't have anything to do right now than to just wait, watch, relax. We've taken the trade, we've accepted this risk. We don't have to touch anything. There's nothing to touch. The system is doing its thing, and we're just here as spectators. Our job was that initial entry. So let's see what happens. Let's see what the market does. So we haven't had a close below the low. So that's telling us something. Okay. This candle formed, we're still inside, so the previous candle did not close below that low, so the low is not very realistic at this point. We'll say, so far, we'll say, well, we're still sideways. Until we close above this, we won't be able to say we have more confidence. Right now, we're neither here nor there. We're, yes, the market dropped, but we haven't had a close below the low. So we're bullish because of all this. The SPX is giving us, I say SPX, the MES is giving us a different feel. It says we're bearish because this is looking at extended time and this is only looking at real time. Yeah, market open. So if you're going based on market open, this is what you're going to see. All right, so we're getting above the high, which is about above the middle. So from this, we have a very great chance that price is going to go above this point. So now we're up $40. We're up $80 now, down to zero. So the trade is working itself out. All we can do is allow it to do its thing. We want to see a close above this candle, above this orange line, but more importantly, we want to, if we close above this green line, then we're looking bullish because, well, if this candle closes above this line, it gives us more confidence that we're still bullish. Right now, we're still a minute left on the candle, so we shall see what it does. We shall see what it does, but we are bullish. So we want to see how price behaves this morning. Looking good. So system is up $280. See, it went as low as 600 and something. Now it's up 10%. The system is set once it hits 20% to lock in some profit. See, P&L right now is up 18%. The stop loss is still at 25%. So this is where it's trying to get to. 19 seconds left on the candle. So let's see what happens. Let's see what he does. Okay, new candle formed. Yes, we closed above that. So we want to see continuation of that. Want to see a continuation flow. So price is coming back down. All right, let's see. So there's a great chance that we get up here just based on the fact that we're above this point. So we're going based on the theory that price is going to get to this point. So let's see what it does. Let's see what it does. So the trade is working itself out. Let's look at the two. So it's looking at, it has 6 slots, so there's only 1 slot used here. So this is all that is looking at active slot. This is a doji, so he's reading the candles. The automation is reading the candles and is using that to make his decision. If we look at P&L, it's up here. So we're up 18, 12%. So let's see. I can move this down here so we can see what he's doing. So we have 20 contracts. We're up 250, 270. So that's where we are. So once that happened, you see another order opened up because of the continuation. Once you lock in profit, it opens another contract. So that's what happened there. So it's hit that target, it's locked in profit. It's locked in $620 here, it's locked in $158 there. You don't have to do anything. It automatically, so the original 20 contracts, it added another 10 contracts to it, right? So I think we're bullish. I think we're going up. I think we're making our way up. I think we're making our way up. We still have room to the upside. Still have room to the upside. So let's see what it does. Okay. All right. So we broke that high. So now we're still moving up. We see some resistance here, but we can't pay attention to that resistance. We just have to stay the course. So the trade is working out. It's locked in 40% here, locked in another 45% here. Trade is working out. I've not touched anything. I'm just letting the trade play itself out. So this is where we're at. We still have both contracts open. So now we're up 900 contracts. I said 900. We're up 30 contracts and the trade is working itself out. Right now is up 1500, but we've only secured 1200 of that. So for as long as the trade continues, we shall continue. Okay, so it's all sold. So we don't have anything opened. So the trade is completed. The trade is completed. And let's see how much. Well, we'll look at how much we made later on because it's going to give us trade report exit. So trade report, reason close all. So let's look at that. So here, 20 contracts, entry was 155, exit was 218, P&L was 39%, so we made 1200 on that trade. The peak was 57%, so we only ended up with 39%. On the second trade, we got in at 105, we got out at 152. 44% was what we made, $470. Peak was 69. So we made, how much was it? 1,690 on this trade, on that first trade. And nothing was done. So just looking for the next opportunity. So we reset. So we don't know if it's going to be a call or put. So we wait. If it's going to be a put, we just set the put here and start. So right now, I'm going to take another call here. I want to see price trying to be above this so I can set my stop a little bit below this. So all this stop is set automatically. So when you do this, nothing is reported. It didn't select a trade. So I'll refresh and then start afresh. Trying to take another call. Okay, so it gives me the next. Just going to take 10 contracts. I've not I've not executed it. I'm waiting for this time. Is a minute 53 left, so I need to change. I need to make sure that the time. Okay, so my call is not valid. I want to see price come down here and reject this low. Then I'm going to buy a call. So let's see what happens. Let's see what happens. Yeah, I can't take any trade here. It's in the midst of nowhere. It's in the midst of nowhere. A minute, 4 seconds left. I want to see what this candle does. Okay, 50 seconds left. So I have this queued up. 40 seconds. I'm not satisfied. So I'm going to take a trade. So I took the trade here. My stop will be a little bit below this. For a continual move up. All right. So I'm looking for price to continue up because it broke this 50%. So this is how you take early entry into a trade, just knowing what you're doing. Um, See, it's up this much. So the journey continues. Our target is this high. Until it gets to this target, we can't have any confidence on how far the trade is going to go. So let's see what happens. Next candle forms. It's still giving us some strength. All right, let's see. So he added some more because that's a continuation trade. But you see, he reduced the size. to get involved in this trade that is working out. So what's the risk? So it's locked in some profit. So let's see what it does. Price is going to 770. It's trying to get up to this projection. So high of day is our target, but we have a strong feeling that we're going to break this line up here. So you don't take any action. The trade is doing what it needs to do. All you have to do is place trade. That's all that is expected of you. And the rest is simple. You just, okay, he sold one. So one got sold. The second one is still on. So you see this one P&L is 29%, but it's locked in 50%. So come rain, come sunshine, you're gonna walk away with a positive of $110 on this trade. No ifs or buts about that. Nothing is going to change it. All right. So we let the trade do its thing. Is it gonna break that? We know what our target is. We're looking for this point, but we're trying to get up here. So that's our goal. That's our goal. We have to stick to the goal. We have to stick to the goal. All right. All right. So we're going for high of day. Our goal is high of day, which is this guy. So this is where we're trying to get to, high of day. Hopefully we can survive it. All right. See, that second runner is still running. It's up 42%. It's locked in $184. So the trade is still working out. You don't do anything. You don't take any action on that trade. You just sit back and relax. Sit back and relax. Your job is done once you hit buy. You can take a walk, you can do anything. The system is managing the trade. So this tool is only available to anybody that uses TradeStation. Over time, we'll make it available for other platforms. But if you're in the US, I see no reason why you're not using TradeStation. I have nothing to gain promoting them, but all right, sold. All right, so that trade is done. So now we wait for the next trade. So we made $184 on that. So we reset again, refresh our screen. So what did we make on that trade? So this is the log of what happened. So on that third trade, report, we exit 7 contracts. Entry was 105, we got out at 131, 24%, and we made $182 was made on that. So we're waiting now for the next trade. See, we don't take any action. We just do what the system tells us to do. So I'm actually doing my live trading on another platform because I'm giving examples with this. I'm taking um, trades on days. I don't want to share my live account, so that's why. All right, so we're breaking below this. There's still 2 minutes left, so we can't do anything on this. We have to wait. We want to see price come back down here. If it comes down here, then we take a trade to the upside. Or if it closes up here, then we take a trade to the upside. So right now, we're looking for price to come down here. So we see this dot here, so we're breaking down. We're seeing a break in communication. The downside is trying to look realistic. But if we take a trade here, we have to remember that we have a stop gap here. And if we move it to this high, which is the previous original close, then we can say this is a potential, this could be a potential step back down. Oops, this could be a potential step back down, or we just go for high and low. So we're looking for price to come back down here before we take a trade to the upside if it doesn't close below this. So if you, so this candle, the dot is now up here. Initially it was here. So if you took this one, if you took this trade here because it hits the dot, this is the advantage of using this because it helps you recognize where you are in the market. All right. So you know that, okay, even though it is bullish, you say now the dot is back here. If you take this trade, say here, this is still your, this is still a resistance. So that creates a challenge taking a trade up there. You want to wait till it breaks it. Once it breaks it with 10 seconds left, you have more confidence taking it and making your stop a little bit below the center. The perfect, of course, you are not going to take big entries with that. But if, let's say, this dot was up here and the um, let's say the dot was up here and the center is here, the midpoint is here, which is where price will pull back to, then you can increase your size based on that. But with this, you don't increase. You don't, because it's moving. So now you're getting another opportunity for an entry. So let's set this up. This time I'm only taking 5 contracts. There is 7 seconds left on this candle. So I took the trade because a new candle is going to form. It was already above it then, but I didn't wait to the close. So I'll see what it does. If it, yep, it's continuing its trip up, and I'm fine with that. Oh no. So it's struggling to stay above, but there's still 2 minutes left on the candle, so you can't take that too serious. We're still bullish. We are still bullish, and that's all that matters. We're still bullish. So we are in this trade. Our exposure is $200. That's our exposure. 25% of what we paid for it. Let's look at what did we pay for the trade. We scroll to the right. $815. That's the total cost. And right now we're up $30. So system is up 5%, 7%. So trade is working out. And I'm more interested in the log, so I'm recording the log to see how it performs. So now that this has broken here, it's trying to come up here. So the system is not, doesn't care about, you don't need to monitor this trade. You got into the trade, just stay in the trade, leave it alone. You don't need to look at anything else. The system will control everything. Is looking at the strength of the candle, is looking at everything to make his decision. So he's not just saying, okay, this is a stop loss and I'm respecting this stop loss. No, he's looking at the activity that is going on. Okay, fill position. So it's looking at the strength of the candle. Where are we? Okay, this is where we're at. So you see, it's saying we have a weak bear. We had a weak bear on slot one, um, and the stop is still, so it's only up 1% right now. Now it's up 2.5%. So it's just the trade is being managed, and you don't need to do anything. You've accepted this risk when you took the trade. That's all you can do right now. You just, the trade is taking, you just wait. You just wait. Once you take the trade, you walk away. The system handles the rest. The system handles the rest. So this is where we're at. We're in the midst of the pack. So you see how I reduced size to 5 contracts. I started a little bit higher. It's all about where you are in the market. Our target is up here. That's where we're trying to get to. That's the only realistic place that price is going to right now. Every other thing is an illusion until it breaks this point. So we just stick with what the market is giving us. No action needed. We're not worried about moving stops. The system does all of that by itself. Does it by itself. So it's up 9%. The stop loss is still 25%. So we're risking this much. So this allows you to stay in a trade for as long as you accept what you're risking. The rest becomes easy. You don't worry about stop movement, ups and down, and all that. It does everything by itself. Um, at the end of this trade, I'm going to stop my, I'm going to stop recording because I have some things to do. Or I can just keep the recording. I can just leave the recording. That's okay. I'll leave the recording. So our target is high of day. That's the only realistic target that we have now. Price is trying to get to this point. So the way the system is set, until P&L hits 20%, is not going to move the stop. If it doesn't hit 20%, well, it's unfortunate. So let's see what happens. So it went up, it's down 12%. You know, this is option, so it moves differently. So we're up 15%, now down 12%. So you don't have the issue of, oh, I need to move my stop, I need not move my stop. No, the system does everything. And it's going to move that stop based on how price is moving. If price is unstable, it's going to respond and reduce its risk. Right now, it's stable at 25% because it knows the market is still bullish. So the market is still bullish. Let's see what happens. All right, we're breaking that low now. We can't do anything. We have to just let the trade play itself out. We cannot interfere. 25% is where the system says it's cutting it off. So it's not going to. So you see, it came down to the dot. If you're managing this trade yourself, you would have gotten out of the trade. You say, oh, it broke the low, it broke this point, so you get out. The important thing is you accepting this risk. Once you accept this risk, then you're fine. Let's see what happens. All right. Well, price comes down to this point. You don't do anything. You're not worried about it. You're not the one managing the trade. The tool is managing the trade. So, but if you're doing it yourself, of course, this is an entry point, right? If you missed every other entry, but you have to remember that this middle point is your Achilles heel right now. You want price to close above it so price can continue to move up. For as long as price is below it, your realistic point is the low of the day. If it's above it, your realistic point is the high of the day. If you start struggling in between, then you're just sideways. So we're still very bullish, even though it's dropping a bit, doesn't have much confidence. The trend is not very strong, especially on the higher time frame. So, but we know we're in the middle of the pack, so we have to keep that in mind. But we're still in the trade. So we don't force the issue. We just let the trade play itself out. Just let the trade play itself out. And the tool is doing the work. Tool is doing the work. All right. So remember when I always say just accept the risk. Once you accept the risk that you are taking, the rest becomes easier. So the very first trade that we took on, I think it was this kind, I can't remember which candle we took. I think it was somewhere here. Yeah, once price broke above and we just took it and it came back down. No, it was this candle, came back down and then went back up. We did not panic because we accepted the $775 risk, which was the initial trade. We were comfortable with that risk and price went up to 680, went all the way down to 680 before it reversed back up. You see what's happening here too. And that's what I mean by just letting a trade play itself out once you've accepted the risk. I know it's hard for us. We were up, then we're down, and we quickly move our stops. That's what happens. But that's what this tool helps against. The biggest thing is when you take that risk, the initial risk. If you didn't get in at the right point, you could get stopped out. So the issue I've had with this tool, and I'll be clear on that, if your system hangs up, if your system freezes for any reason, this trade scenario is not going to run in the back end. So that's the drawback that you're going to run into. But once you start the computer back, it resumes is is it resumes its management. So we're in this trade. We're still bullish. Nothing to do. We just stay in the trade. Now there's something in the system that says after 15 minutes, if price is not making progress, it should reduce the risk. Right now the risk is at 25%, which is $204. So if we don't make progress in 5 candles from when we got in, it's going to reduce the risk on the trade. If we don't get to that 20% within 5 candles, it's going to reduce this risk from 25%. So let's see how it handles that. And it will continue to reduce the risk till the risk gets to zero if we don't get to that 20%. And we're not there yet. Right now, we went to as high as 11%, then we came back down to 3. Now we're down to 1%. So who knows? We could take a loss on this trade, but we've already made money and we're factoring the money that we've made into this particular entry. So we don't find ourselves green. The other thing this tool does is it has a daily limit. So it doesn't allow you to take trades if you hit your limit. And that limit is based on what you set your limit to be. If you say your limit for the day is 10,000, or let's be simple. If you say your limit is $1,000, that means once the system loses $1,000, it would not allow you to take any trade. Now, you could still go into the tool and take a trade, into the system and take a trade, but you won't be able to use this tool. That means you're violating the rule of the tool and you're just bypassing that tool and trading manually. So this is why we call this a semi-automated trade. It automatically select the stop for you. Then once the afternoon comes, we check this box that says 1 DT and it will start to pick 1 DT trades, right? So right now we're in a call scenario. We have no reason to look at any put. Right now, this is where we're at. Our high and our low. Just wanted to move that out. So this is what we have going on. We're still bullish. We can't take any entry here. Now, see what I mean? If the price come closer to here, then you get an opportunity for an entry and the dot is below, perfect entry with size around this. If price comes down to this point, a perfect entry with size when it starts to come back up at the right time. This time frame has to be within 20 seconds of the candle. That's what keeps you humble. All right, so let's see how it goes. See, I've not touched anything on this trade since I hit place order. That's all you need to do. You place order, you can walk away. The system will handle the rest. So you see, it was up. It was okay. It was up 12%. Now it's up 14%. Went down all the way to 1.2%. How many people will be holding at that point? That's the advantage of this tool. That's what it does. It removes your emotional part of the trade. It's just that if you don't understand where to get into a trade, you can get chopped up like a piano. Or I don't know. You can get chopped up. That's all I'm trying to say. You can get a lot of paper cuts. The reason why we're still in this trade is because of our entry. Once you take the right entry, it doesn't matter what is doing here, you're still green. This trade is still green. If I show here, See, the trade is still green, still up. How much is it up? Yeah, it's still up 40 bucks, 55.37. So the trade is still good. And if it closes below this, well, our risk is this much. So let's see if they stop, because it's not getting to the 20%. And I don't know how many candles we've gone, but we'll see what happens. So the trade is going on. You don't have to take any action on this. We are still very bullish, so we know we're bullish. We don't need to do anything. We took the trade at the right spot, so all we can do is just wait for it to do its thing. That's all we can do, nothing else. And that's how the tool works. So this tool will be I think it's $475 a month to use it. Um, that's a very generous price for what it does for you. So P&L is up to 12%, went up to 15, but you're not. You can walk away from the trade. You're not doing anything. The trade is managing itself. It is managing itself. So once he broke that, he sees more opportunity. So he bought in, he added some more trades, right? He added some more contracts into the mix. So he sees that this thing is still bullish. So he added to it. We'll see what happens. So you see P&L is up 22%, is locked in 10%. Is locked in 10%. He only bought 4 contracts on the next one. So I have to look at this second one to see what happened there. But we're up on this trade. We're up nicely. Well, we're up 22%, but it's locked in 10%. So that's the beauty of the tool. Come rain, come sunshine, we're going to walk away from this trade with a 10% gain, which is $81. The system is up $120 now. So we're giving it some room. We're leaving this much on the table. So let's see what happens. Right now, we've locked in 10% on this first trade. We have nothing to lose at this point. Nothing to lose. So we just leave the trade to do its thing. He added a second trade into the mix at a much lower price, surprisingly, which allowed it to um, take this. So I have to see if this is as a result of, I think this is the issue with simulation mode. This second fill was not a realistic fill, 769. I have to go back and check. But I'll stick on the first one, see how he's managing the trade. So he's up 25%. This guy is still at 10%. So for every 10-point move, if this goes up to 35%, then this locked in increases. So you see, it just went up to 20%. So I think it's 25%. So so now it's locked in 20% because it sees that it's closer to this point. So it reduced its risk. That's the beauty of it. All right, we're out. So The minute that started to come down and it broke 50% of the previous candle, it sold it automatically. You didn't have to do anything. That action was done by itself. No one else was involved in that. It made that decision on its own. There's no. So this other trade is still active. The second leg is still active because that one stop is not same as the first one, but it's up $63. So this one only locked in 15%. So if price continues to come down, it'll take it out because the stop on the runner. So this is considered a runner trade because the first one takes everything out. The second one is the runner, and the system automatically loads the runner for you. So it buys 5 contracts. When the trade is working out, it buys, once it hits 20% and it shows that it's still bullish, then it buys a little bit less than what it initially bought to continue the trend. So if that first trade ends, this one is at a much lower rate, so the trade continues, and that's what happens. All right. So see, we thought it was going out. That first trade has left, but this trade is still active, and we're looking good again. But we need to break the day's high in order for us to have some confidence in what we're doing. So even if you don't have the tool, what this is telling you is once you take a trade and accept your risk, don't start moving things around until you get to your target. The mistake people make is, let's say they get in here. By the time they get here and price starts to come down, they see that they were up $100. Now they're down $10. Then it goes back up again. They're up $100, and they quickly move their stop to somewhere here. Then the thing comes down, takes them out, and the thing continues. But if you respect what you're doing, if you trust what you're doing, when you got in, your stop was here. Your target was up here. The only time you should move your stop is when you get closer to that target so you can then find the pullback on that, and this now becomes your stop. So that allows you to stay in a trade that is trending much longer. So right now we're trading a range from here to here, came back to the center, went back up until it breaks this. Now you see this high probability zone here. It's going to need some more buyers to break out of this point, but it's not impossible. It's possible, it can be done. And that's what we can only hope for because we're in this trade. So we can expect for it to do that. But again, this trade is active and nothing is stopping it. You are not doing anything. See, it's showing here. If you look at my mouse right here, it says weak bull. So this is bullish, but it's a weak bull. So it recognizes that. So and he's using that to manage that trade. So it's up 34%. This is locked in 15% of the trade. So this trade is still active. We're still going. So, and that's how you manage your trade. So it's locked 15%, but it's up 33%. So it's holding almost 20%. So, but the reason why it's not moving right now is because we're close to this point. I think once this candle closes in 2 minutes, something can oh, you see, it's gone up to 25%, 35%. You see how that happens? All right. So now it's up to 35. That one is, so the 35 is the base right now. It's not going to come back down. It's not going to come back down. So the trade is working out. Now it's locked in 147. The exposure is 228. So the trade is working out and you don't have to do anything. You just sit back, relax, and let the trade do what it does. The mistake people make is the first trade works out, then they just go crazy and increase size. Just let the trade, once you feel comfortable with the tool, then you can increase size. But you know when you take a loss, the loss could be, I took a loss some time back that was significant before I then put a daily limit on my losses. So the tool, I always use the tool, but also always looking for ways to improve and refine it depending on the market condition and environmental condition that we're in. So this is what's happening on this trade. So this is where we're at. Scaling add-on floor 35 peak is gone as high as 50%. So P&L is there. So 40%, 38%. Once you hit 35, he's going to sell it. So that's the trade on the tool. This is the tool. This is the system itself. So we're back up again. So still active. The trade is still active. Can't do anything about it. So this is my log. I review the log at the end of the day to be sure that it's doing what I expected it to do. But once you decide to subscribe to this tool and start to use it, you won't have to um, you won't have to use the log. I just use the log for monitoring, making sure that since it's not yet released, is like test phase or what do you call it? Scenario management. So he sold it. I just saw, see, it sold. So you see, that's what I was talking about. I need to do something. See, the trade is gone. It's finished the trade, but this is still holding up the slot. So I need to stop that to cancel that slot. So, well, that trade is over with. We're done. Nothing else to do right now but to just sit back and relax and look for the next opportunity. Where is the next opportunity? If price comes up here and refuses to continue to go up and starts to come down, could be an opportunity against the trend to get to here or here. So you have to define how much is worth for you to take a trade here, to come here, or for it to come down here. So the question you will ask yourself is price coming down here? Is it realistic for me to think price is coming down here? No, right now it's not. The only realistic thing right now is price could come down to this point. Once it breaks this point, Then we have a realistic point of price coming down here. At this point, it's closer to the top than the bottom. So we're still relatively bullish. Price could continue to go up, but we cannot get into a trade here. And this is where this comes in, which is why I brought this into the mix. So this is the new high. This is the new high. This is the new high. So this is our new point. If price comes down to this dot and you take a trade here, what happens? You're taking a trade in between, which is no man's land. So you want to make sure that you're at an advantage point. It just, okay, can you take a trade when price comes down to this dot? Yes, you can. But what is your realistic target? This is your realistic target. So if price starts to come back, what's the realistic reversal? This is the realistic reversal. So then what you have to do is try to get into trades as closer to where the entrance is. This is an entrance to the downside, an entrance to the upside or downside, an entrance to the upside. Until price closes below this line, you cannot look to take the downside. So now, if you take an upside here because price is close to this is as far as you can see right now. And how much money would you make from here to here compared to what your risk is? All right. So that's the adjustment that I want you to make to improve your win rate. Is you recognizing the system is actually doing it for you, but which is you see it, so this line is the same thing, right? This line has this line down here, no difference. So it's already doing it, but you cannot see it. You might not be able to pay attention to it visually. So what this drawing it keeps it in plain sight and you can see what you're doing. It becomes a lot easier for you to visualize it when you're taking a trade. So right now I'm not using the tool. The tool is, let me refresh it. So the tool is fresh. We don't have any new trade, right? So we're just waiting. We're just waiting. Now, this tool will not stop you from taking a trade between 11:30 and 2, but it reduces your risk. Oh, sorry. It actually stops you from taking trades between 11:30 and no, it doesn't. Sorry. It doesn't stop you from taking trade, but it reduces your risk. So it won't let you risk more than based on what you've made throughout the day. So it's logging in what your win what your win rate is throughout the day and is using that to help you manage how many contracts you can buy. So let's say you're on a losing streak and you've lost $500 today. It will not let you take $1,000 risk. So if you try to take a trade, let's say your last trade was 5 contracts and you took a loss of $250, then you want to take a trade of 10 contracts now, it's not going to allow you to take that trade because it's set to manage your returns. So we're up here. So what's he going to do? Is he going to break this? We don't know. But that's his target. So it's almost met his target, but it seems price wants to go up. So it might break this, what's this called? It might break this high probability zone and come up to TP1 there. But we don't know what it's going to do yet. 7 on SPY 770 is where it's going to. How did I get 770? I'm looking at SPX. So XPS, let me do the math for you. SPS is 776, 7717 times 10.03. Oops, what did I do? 7716 times 10.03. Sorry, divided by 7717 divided by 10.03. 769.39. So price is trying to get to 770. Let's just say 770. I think it's hit it already. Around here. That would be 7718. Yeah, it's hit 770. 7718 divided by 10.03. Yeah, it's close. It's very close. It's very close. So 770 is his I think that's his target. So we've hit that top. The question now is that the highest that we can go today? We don't know. We don't know. We just wait and see. We just wait and see. So if price does not continue, then it's going to come down if it doesn't continue. So seems to want to start to break down. So target hit up here. This is our new target now, but we're still bullish, so we can't be looking at any bearish trade. We're only looking at bullish trade. We are still bullish. We can't be thinking bearish. Market is still bullish. All right. So what is price trying to do? So if you take a trade here expecting price to continue, your target is up here, but you have a resistance here that you can't ignore. So you have to be mindful of that while in a trade and then see what happens with that trade. So right now, the only realistic trade, there's really no trade. There's really no trade right now. The most price can get to is up here, but seems price wants to go up because every time it hits this, it continues to get new high. So we'll see what it does, but we're not going to hang our hat on that and risk um, gains that we've made. And that's why we have to be patient. We just wait. We're looking for the next entry. We don't know what that is going to be. If it's going to be calls or put. So we haven't determined that yet. To take a trade here for the upside means we're banking on price breaking this high. Let me switch this back to SPY. Alright, so this is where we're at. This is our high, this is our low, this is where we're sitting. Can't do anything. We can't do anything about it yet. But of course, the system is giving us, it's letting us know that it's still bullish. So any idea for us to try and take the downside will be premature. And if we take the upside, the highest we can go is high of day. And how much is that? About 30 cents. So do you want to take a 30-cent trade with a 30-cent risk? It's not worth it. So we sit on our hands till price gets to where we consider it to be realistic, a point. So right now we're not at any realistic point. We're stuck in no man's land, in the midst of nowhere. We're stuck in the midst of nowhere. All right, the market has 17 seconds before we take a break. Nothing for us to do right now than to watch and pray. Watch and relax. No trade. So if you say, okay, price gets close to the dot, you want to take a trade here, you have to think, what is my target? This is the only realistic target. And the distance from here to here is what? 99 to 39, 60 cents. So 60 cents is your risk. Your reward is 3 dots away. 1, 2, 3. That's 3 dots away. So if you take it here, 50, 3 dots away is 0.5. So I'm looking at the price point here. So you're talking of a risk of about 50 cents for a reward of 60 cents. That risk reward ratio is not even, is barely 1 to 1. What we're looking for is 1 to 2, 1 to 3. All right? Because 1 to 1 just gives us 100%. 1 to 2 gives us 200%. And that's where we want to operate from. All right, so right now, if we take this trade, here, this is our max. Price has not gone past this point. And this high probability zone and fair value gap here, all this red here, doesn't encourage me to say take a trade here and see what happens. Risking, according to the tool, my risk is going to be 25%. So do I want to do that? Maybe I do, maybe I don't. But I'm going to be stingy about taking that trade. If you are closer to here, then yeah, maybe. But me taking a trade here is me saying price is going to go past this, or I'm okay with a one-to-one relationship. But there is not, for me, there is not enough meat in the bone to take this trade here with a risk here. It's just not enough meat in the bone. And that's why we just wait. That's why we just wait. We're waiting for the best opportunity. We're only interested in best opportunity or higher probability trades. The dots gives you a high probability trade. Drawing the 50% gives you a higher probability rate, if that makes sense. So right now we don't seem to have much luck. So we come back here. You take a trade at this dot, expecting it to come up. Yes, you could. But like I said, this is your target. You have to know where you're going. And you have to ask yourself, how realistic is this point and beyond? Because taking it here is assuming it will go beyond. When price was here and this was down here and you were down here, taking a trade here tells you you can get up here. That's a wide enough point. Your risk reward at that point is this. So that's your reward, and I don't know how to use this thing. Your reward would be this would be your reward from here to here. That's a $20 move. And your risk is from here to here. That's 20 cents. That's much more realistic than. So this is, let's not get ahead of ourselves. This is where we're going. So I'm not saying it's not possible, but if we break that, then we continue the trip up. But until that happens, we cannot categorically say, okay, this guy is going to work out. We can't say that. We cannot say that. We have to be realistic with ourselves. Okay, so it's breaking out of it. Now that it's broken out of this, it's giving us the confidence that price still has some more move left in it, which is a good thing. It's not a bad thing. It's a good thing, and we want to celebrate that, right? So now we can't take this trade. Price is coming up here. So that's the risk we take. That okay, now our stop is up here. That's the highest price can go. So what do we do now? What do we do? We just have to wait. Yes, we're out of all of this. We can't do anything about that. We can't control that. The system has gotten what it wants and is just waiting for us to take action. We could have taken action here, expecting price to break out and still expect price to continue to break out. But the chances of it, I don't know. I don't know. I just don't know. So we have all of this to contend with. So we have to ask ourselves if we want to take a trade here for a move to continue up, or is this going to break down? That's one thing we don't know. But price, until price breaks this point, we don't have any trip up. Now, if it comes back down here, that's a decent move back up, but we don't know what's going to happen. This was a very bullish candle. You would expect the next candle to be very bullish and strong, but it's not showing that it wants to be strong. So it's showing some weakness right now. As much as it moved this much, you want to see continuation, but that's not what we're seeing. We're seeing some weakness. but it could still break out. It could still break out. You never know. You never know. So you just wait. You wait and wait. All right. So it's almost 11, and I'm going to end this recording to end the morning session. But that's how you use this to trade. But more importantly, I was sharing how to use this. So at this point, if you're taking a trade here, it is a continuation trade. It's a risky trade because you're banking on price. Now you're banking on price getting up here, but our risk is we're just too exposed with our risk. That is it something we really want to do? That's the question we have to ask ourselves. Is this something we really want to do? Because it could put us in some situation we don't want to be in if price starts to come back down. So we have to be mindful of that. We have to be mindful of that. All right. Anyway, um, I think this is all for now. Thanks for your time and wish you luck out there.